Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about the top highlight events that are expected to be moving the markets today, the key trends that are developing, and of course, what we are currently experiencing this Thanksgiving week. So as we all know, usually on the last week of November, this is the last Friday of November. On the Thursday, we call that the Thanksgiving Day. And then on Friday, this is when we have Black Friday. So there is a lot of activity happening in the markets right now. And of course, tomorrow being Friday, on Black Friday, the US markets usually trade for half a day. So tomorrow there will be a much shorter trading session that is for US stocks, but for the rest of the market, including commodities, gold, indices, currencies, they will be trading just as normal, albeit we might see reduced volumes due to the holiday activity. So this is the last week of November as we approach the end of the year. So on December, we usually have a bit of a low liquidity in the markets. But then at the same time, we start considering what we call the Santa Claus rally, which is a rally that usually happens on US equities. And these sometimes can be up 1 to 3% on the top equity indices. So if you have no idea what Santa rally is, it's time to start looking and researching into it so that we end the year on our high. So while at the same time, we know that we don't take the market snapshot through to January. So at some point in December, we'll end the sessions and then resume in January. So if you've been attending these sessions, what's your honest feedback? Has these sessions really grown or helped in your trading activity? And if they have helped you grow or identify good opportunities in the market, kindly share the feedback on the comment section. And at the same time, if there's something you'd like us to change, kindly drop it in the comments and we will consider this. So as usual, this session does not constitute any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. All right. So let's continue. On today's session, we'll be starting with an analysis of what's currently happening with currencies before we move on to the economic calendar. So you can already see Francis Omondi in the house. Good morning, J Squad in the house. Lina, good morning. Uh, also, there is already a critical question in the comment section from J Squad. Bitcoin has been tanking. What's happening? Or it's normal for it to retrace before we get to 200, and I'm assuming 200K. Well, I'll be addressing that as we continue. Hi, Mr. Patrick. Thank you for joining. So as you can see from what's happening in the currencies this week, we know that the Reserve Bank of New Zealand cut rates by 25 basis points to 2.25%. And as a result, we saw the New Zealand dollar recovering, which has been a trend of the year, where at first, if a central bank is going to cut interest rates, we tend to see the currency weakening ahead of schedule, usually a week before the announcement. And once the announcement is made, we see the currency trading in the opposite direction, in this case, strengthening. Also, one notable thing is that the Reserve Bank of New Zealand decided to hold any further rate cuts. So that might be the end of their rate cutting cycle for the near term. And as a result, we saw the New Zealand dollar strengthening. So for the week, the biggest winner in the currencies is New Zealand dollar, which is up 1.97% against the USD. So as gold recovers, we tend to see a correlation between Australian dollar and gold. So gold being on a recovery trajectory, we have also seen the Australian dollar gain 1.13% against against the USD for the week. The UK pound is up 1.02%. This is after yesterday, the Chancellor of the Exchequer basically leaked the budget details, and the market reaction was purchasing more pounds. As a result, we saw the pound gaining 1.01%. The euro is slightly up 0.68%. The Canadian dollar 0.41%, Swiss franc 0.36%, and of course the weakest currency for the week has been the JPY and the USD, with the JPY basically gaining by a slight percentage of 0.09% against the dollar. So that's the summary of the currencies as per this week. And if you look at the year-to-date performance for all these currencies, you'll notice from this column here, performance year-to-date, that we have had an 11% drop in USD Swiss franc, meaning that the Swiss franc has been gaining against the USD by a margin of about 11%. So another big gainer has been Euro USD, where the Euro has gained by 11.92% against the USD. And of course, we have a 5% gain in Australian dollar against USD, 5.85% in Euro gaining against the pound. We have 5.72% in the pound gaining against the USD, and 5% in the pound gaining against the yen. And this is since the year started, clearly indicating that the dollar has been the weakest currency for the year. So that being said, let's jump into the top highlights for the day. So looking first at the economic calendar, you can see that the calendar is pretty thin for today. So looking at the bank holiday here, which is happening all day. So US banks will be closed in observance of Thanksgiving Day, which is today. So clearly we expect little to no volatility during the New York session. So early in the morning, we had the retail sales data from New Zealand. It showed a very strong uptick of 1.9%, which boosted the performance of the New Zealand dollar in the market. This was against an expectation of 0.6% gain, and of course, the prior reading, which was 0.7%, which was revised higher from earlier reported 0.5%. So core retail sales also up in New Zealand, 1.2% quarter over quarter, which was better than the expected 0.8%, and of course, higher than the upwardly revised 1%, which was revised from 0.7% in the prior reading. So going forward for the rest of the day, if we expect any major news to be impacting the markets, that would be the ECB monetary policy meeting accounts. So these are the minutes of the last meeting by the European Central Bank. They're usually released about 4 weeks after the minimum bid rate is announced. So after the ECB makes the interest rate decision, 4 weeks later we get the notes or the minutes of the meeting, and this gets us into the final details of the discussions, what the ECB Monetary Policy Committee discussed in the prior meeting. So as per definition, it's a detailed record of the ECB governing board's most recent meeting, providing in-depth insights into the economic conditions that influenced their decisions on where to set interest rates. So as you all know, in the last meeting, the ECB decided to hold interest rates steady at a level of 2.15%. So we'll be getting final details of why they decided that. So this has the potential to cause movement in the euro pairs, where if more ECB members were considering cutting interest rates, that would likely weaken the euro. And on the other hand, if more ECB members were considering holding rates at the current level or even hiking, then that would likely strengthen the euro. So other than that, we don't have any other major news. So tomorrow morning at around 2:30 a.m. during the Tokyo session, we'll be getting the Tokyo Core CPI, which is a measure of inflation in the province of Tokyo in Japan, which is usually a leading indicator of the overall consumer price index in Japan. So in this case, we're expecting that inflation likely slowed to 2.7% compared to the prior reading of 2.8%. So we also be getting job market data where the unemployment rate is expected to have improved to 2.5%, down from 2.6% in the prior reading. We'll be getting preliminary industrial production month-over-month data for Japan at 2:50 a.m., where we expect a big drop in industrial production from a previous gain of 2.6%, which was revised higher from 2.2%, to an expected negative 0.5% contraction. So this shows that the market expectation is that industrial production in Japan is weakening. So at the same time, we also be getting retail sales data. So retail sales year over year expected to spike higher to 0.8% compared to the prior reading of 0.2%, which was revised lower from 0.5%. So clearly, this will be a host of economic data from Japan, and all these are expected to impact the Japanese yen pairs. So on one side, CPI is clearly a key indicator. You can see it's highlighted as medium impact news. So if inflation is on the rise, this has the potential to weaken the Japanese yen. We know that they are not going to hike rates. The new prime minister is looking to inject more liquidity in the market, with several $billion set to be injected into the Japanese economy. So this basically means that there is a lower likelihood of rate hikes. And if inflation is on the rise, this makes the situation worse and could potentially weaken the JPY more. If unemployment rate improves, that will be positive for the Japanese yen. And of course, industrial production and retail sales, an improvement will be positive for the yen. And a weakening of industrial production and retail sales would likely weaken the Japanese yen. So the rest will be covered on tomorrow's market snapshot, which is a session that happens daily from Monday to Friday at exactly 11 a.m. So that being said, looking at other news in the market, just give me a sec. On the Fed rates, we know that the CME Fed Watch tool, which tracks the bets from interest rate traders, has now increased their probability of the Fed hiking interest rates on the next meeting to 84.9%. So this means that the market is pricing in a very strong probability that the Fed will be cutting interest rates on the next meeting in December, and that will be happening on the 10th of December. So that's a few days from today, about 13 days. And of course, this has continued to weaken the dollar, the expectation that the Fed will be cutting rates on its next meeting. So on other news, the biggest and most trading ticker in the market today is silver. So silver stockpile slump in China poses a new risk to a hot market. So the global silver market faces a fresh risk after Chinese stockpiles sank to the lowest in a decade, with a huge volume recently shipped to London to ease a squeeze that drove prices to a record. Inventories in warehouses linked to the Shanghai Futures Exchange recently hit the lowest level since 2015, while Shanghai Gold Exchange volumes are back to the smallest in more than 9 years, according to Bose and brokerage data. The drawdowns came after Chinese exports of the precious metal surged to more than 660 tons in October, the highest volume on record. So the tightness stems from rising exports to London, said Zijiawu, an analyst at Jinrui Futures Company. who also cited industrial and fabrication demand. The shortage may ease in about 2 months, he said. Silver has had a tumultuous year, with prices running 80% to a series of highs. The spike came as gold surged, and traders also wagered that the Trump administration may introduce a tariff on the cheaper metal. The pull that pulled silver into the US, tightening the London market just as Indian demand boomed, triggering a historic squeeze. Now the slump in Chinese holdings means the country may not be able to provide a backstop to the near term. In the near term. So if silver is tariffed, then it will lock up the silver that has already made its way to the US, said Daniel Gali, a commodity strategist at TD Securities. So if that were to occur, well, Shanghai markets are still reeling from the last instance in which they backed up London, then the impact will be significant. Reflecting the tightness in China, near-term silver prices have topped later-dated contracts in Shanghai, a pattern known as backwardation that signals short-term pressure. Given the low inventories and so-called inelastic or sticky supply, concerns remain elevated according to Jinrui Futures Wood. So on the demand side, Chinese consumption of silver for photovoltaic components, basically solar, one of the metal's primary uses, has risen. The fourth quarter is typically peak season for solar installations, Wu added. So in an unintended twist, a recent tax revamp has also spurred demand. New rules ended a long-standing rebate on input value-added tax for some gold sold outside exchanges, prompting some retailers to switch to silver. So the impact can be seen in Shenzhen's sprawling Xubei market, where many transactions had traditionally involved non-exchange gold. Many merchants are uncertain on how to price their products after the new rules. Some shifted focus to silver, especially if they already have some silver business. Spot silver traded above $52 an ounce on Wednesday after rising more than 1%. Outside of China, silver market liquidity remains a concern, with borrowing costs still elevated in London despite a record inflow into the UK capital. Traders are also monitoring any potential US tariff on silver after the precious metal was added to the US Geological Survey list of critical minerals. So most of the physical demand today for silver out of London is associated with pure speculative demand. The volume in ETFs, which typically can't be lent out, has held firm, with no major redemptions even after prices eased from their recent record. So for now, traders can put some hope in China's off-exchange stockpiles, according to Gali. Quite possibly, the backwardation will drive inventories back to the exchange, which will likely take about 2 months. So it remains unclear how much of the invisible inventory there is in China. By many accounts, it's likely quite large. So clearing something has been happening in the silver market, and it's becoming a very, very hot topic as per today. So if you use, let's say, X for your research, you'll notice out of our top accounts are talking about silver today. So, for instance, on technical analysis, we have a cap and handle still in play. So, a break above $52 per ounce of silver will likely drive silver into a new record high. So, the global silver market, this is from Fastcook, faces a fresh risk after Chinese stockpiles sank to the lowest in a decade, with a huge volume recently shipped to London to ease the squeeze that drove prices to a record. So from bar chart, silver on track for highest closing price in history. And most importantly is this update. The silver crisis, Shanghai inventories empty in 9 weeks. So in 9 weeks, Shanghai inventories could be empty, and these basically could drive a short squeeze where you see the price of silver running to a new high. Shanghai Futures Exchange silver inventories are collapsing at an alarming rate. Current drain rate suggests complete depletion in just 9 weeks. So that's end of January 2026, no silver left in Shanghai vaults. So the math doesn't lie. Annual mine supply is about 850 million ounces. Industrial demand is about 1.2 billion ounces, which means that the demand is higher than what is being mined. Annual deficit is about 150 million ounces, and London's free float is around 170 million ounces, which basically means there's no enough silver for even speculation. So this leads to the expectation that the price could spike even higher. So outside of silver, there's many more updates happening in the market. So European markets set for higher open, eyeing a fourth rate gain on expectations of deeper Fed rate cuts. Investors also await regional confidence surveys, inflation expectations, and lending data. In pre-market trade, Euro Stocks 50 and Stock 600 futures were both up around 0.1%. So German consumer morale improves slightly. Dollar extends fall on Fed rate cut bets. China industrial profit growth slows in January to October period. Oil falls as focus remains on Ukraine talks. So the Ukraine talks basically progressing really well, and Ukraine has accepted a potential deal, which would be a peace agreement between Ukraine and Russia, which could mean the end of the war and basically remove a premium on oil price. So the Bank of Korea revises GDP and inflation forecasts higher, whereas Japanese shares gain on dovish Fed bets. So those are some of the key highlights in the market as of today. So there's also been a discussion that Nvidia is practicing circular financing schemes where it invests in a company and the company uses the money to buy their products, even if that company is making losses and couldn't otherwise afford to buy their chips. So they sent a circular to Wall Street analysts arguing against the case, basically saying that they are not practicing that. So it has been a developing story. So you might want to check it out on Yahoo Finance. So Fed Chair Powell's allies to open path for December rate cut. So this is more about Fed members, basically talking about what could be uh, the next decision by the Fed on 10th. So this came especially after New York Fed President John Williams said he supported a cut in December. Williams said the Fed had reason to reduce rates now in order to help prevent further weakening in the labor market. A cut next month would also be in line with the agenda Powell laid out in August, with the Fed now having slashed rates at each of its previous two meetings in October as well as September. So other than that, I'm trying to see if there is any other key highlight for the day. None. And of course, as per the stock market, we know things have been pretty much green, especially after yesterday's trading. With semiconductor stocks making the biggest recovery, you can see Broadcom was up 3.26%. AMD 3.93%, Micron 2.55%, Nvidia 1.37%, Intel Corporation 2.73%, Qualcomm 1.13%, Texas Instruments 2.21%, NXP Semiconductors 1.43%. So clearly, almost everything, I believe everything in the semiconductor stocks was on the rise. So clearly, that was a pretty good session yesterday. So in semiconductor equipment and materials, we had Lam Research Group being up 2%. Applied Materials was up 3.1%. You look at Teradyne 6.98% in one day. Qnity Electronics 1.56% and KLA Corp 1.15%. With the only company that was losing yesterday being Solstice Advanced Materials Incorporated, which was down 1.41%. So even the banking sector was doing pretty well yesterday, led by JP Morgan Chase up 1.53%. So clearly it was a pretty good day, and we are seeing more of the recovery happening, including Tesla, which was up 1.71%. So we expect the bull run to continue, and to see more performance and recovery happening later today. So a good question here. Good morning, everyone. Is it advisable to trade the month of December? Well, this really depends on you. The markets will also always present trading opportunities, whether it's January, whether it's December, or whatever month that is. Opportunities come to those who wait, those who are patient in the markets. So if let's say you are moving to your village where internet is unstable and you are distracted, you might want to take a break. But then if you're looking for that extra squeeze to fill up your ear, then it might be a good idea to be patient and wait for opportunities. So if you are one of those people who decides to go party on December, on the days that you decide to go party, then you have to keep off your trading account. You don't want to make any mistakes. But then if you're focused on productivity each day, then it's absolutely okay to be looking for opportunities in December. Thank you for joining from Nyeri. Sellers are trapped in EU. Yes, we'll be analyzing the EU later on in the presentation. So also a good comment from Limo KV. On the circular story, I saw a Yahoo, let's say, I'm assuming a Yahoo article, where other tech companies and businesses aren't reporting profits tied to AI contribution. So this brings the bubble burst more and makes it more practical. So yes, there has been out of concerns on the market being in a bubble. So I can try and show you something I had shared on X. So just give me a sec, see if I can find it. Yeah, I don't know if this will be clear enough for you guys. But this chart basically shows the SP500 Magnificent 7 stocks using the blue line here, and the rest of the 493 companies in the SP500 using the red line. So there is a gray vertical line here where you see a double line here, and this represents the day the ChatGPT went online. So after ChatGPT went online, this was the valuation of the Magnificent 7 stocks and the rest of the 493 stocks in the SP500. So since then, you can see how valuations have changed. So these companies have slightly gained since then. They haven't made much. But the valuation of the Magnificent 7 stocks, including NVIDIA, Google, Meta, Microsoft, Tesla, Amazon, they have all gained astronomically since the introduction of ChatGPT. So yes, the AI trade has raised the valuations of these companies 5 times over compared to the rest of the 493 companies in the SP500. And this is why a lot of investors are screaming and basically saying that this is likely going to be is likely what do we call it? It's likely we call it a market bubble. Yes, it's likely a market bubble given that huge variation in what happened in the market. So yes, it makes a lot of sense. But then bubbles can hold for a longer period than you think. So you could be seeing an extension. And of course, the US is not going to let the entire AI sector collapse. So of course, they could bail them out or even print more money to continue supporting the AI sector. So, good question. Do we have commodities like cattle in FXPesa MT4 or MT5? I don't think we have that. But I'm going to show you a highlight of the commodities we have on the platform and how to check for that. So this is the MetaTrader 5 trading application. So go to the market watch section, right click, and then go to symbols. So from the symbol side, you are going to see rolling futures. From the Premier account, you will see CFD futures. This is for Eurobond, Eurobubble, and carbon trading, natural gas futures, Schatz band futures. We have high-grade copper futures and UK gilt futures. So on commodities, right now we have cocoa, we have coffee, as well as cotton, and that's for agricultural commodities. Usually they're not very popular with Kenyan traders, but if you want to trade them, they are available on the platform. We also have CFDs on oil futures, so Brent crude oil futures, WTI futures, and just trying to see on the metals side, we have gold futures as well as silver futures. So feel free to check them out for yourself. And of course, we have many more futures. For instance, on the indices, we have the China A50 index futures, Singapore 30 index futures. We have all these other indices ranging from Australia, Dow Jones, Nasdaq, SP500, and many others. So today is not the day to cover all the assets that we have to offer. So make sure to feel free to check them out. So on the chart side, the very first chart we have here is a triangle kind of pattern that is shaping up on the 4-hour chart on gold, showing us the all-time high that we experienced in the month of October, the swing low after a big sell-off where gold fell to around 38.96, and the recovery path, which has been a bit chaotic. But now we are on the verge of breaking this particular trend line, and the market has been really trying since yesterday. So from the 15 minutes chart, you can notice that yesterday we had 2 attempts to break that resistance, which failed, leading to a big sell-off, going back to the session low here, which happened earlier this morning. And now we are seeing gold recovering, attempting to push again above 41.71. So as soon as we break above 41.71, that would mean that now we engage in a recovery path that would likely drive gold to newer highs. And of course, the previous high was 43.78. But before we target that for the short run, for the intraday traders, our target would be much more nearby, which is around 42.43 in case we have this breakout happening here. So we could potentially see the price of gold making around 42.43, which was a high that we experienced on the 13th of November. So good chance that once we break above this, we move even higher. But now gold is still in a range that started yesterday, and we need to break out of that range. So on the one asset we discussed earlier, which is silver, we had this channel moving downwards, and then we broke it earlier in the week. And after breaking it, we saw a very strong rally yesterday. That was Wednesday, the 26th. And today, after a slight pullback, we are seeing a very strong sustained rally that is expected to hit this high here. And that's around a price action level of $54.463 per ounce of silver. So you go to the 4-hour chart, you notice that this is a familiar pattern where you get a cap followed by a handle, which is usually a continuation pattern in a bull market. So the handle is almost complete, and it will be completed once we get to the prior high of $54.463 per ounce. So clearly, once we break that, there will be no candlesticks on the left, which likely means that we are going to see a burst of momentum higher. So on the oil side, we are still in this pattern on the 4-hour chart, where oil has been falling for 4 straight weeks, this being the 5th along these 2 particular trend lines. And these weeks, we seems to be swinging from the lower trend line. So having seen some recovery happening on Tuesday, and then on Wednesday pushing higher, today we opened with a gap, and the market has already closed the gap and is now pushing to close the weekend gap here. So clearly, the next destination for oil in the short run seems to be the prior high, a high that we had discussed on Tuesday, the market was expected to hit here before dropping. So now we are looking at a target of $62.917 per barrel of UK oil. So on the indices side, we already got our breakout, especially on the Dow Jones. So a very, very strong recovery. So earlier in the week, we discussed a move to this particular area, which was the resistance on Tuesday. So on Wednesday, we extended the rally, and today being Thursday, we are seeing quite a slow market. So that's why I highlighted this range. But then if you really think about this, where have we seen this before? We talked about this on Tuesday, and we have talked about it on many other sessions, where markets can move slightly sideways, like we saw here on Tuesday. So I'll try and show you what happened. So on Tuesday, we had this sideways momentum, and we talked about the Judas candlestick. So we showed that on the prior day, on Monday, we had a sideways momentum since open. We had the Judas candlestick, which basically betrays you, shows you that the market is moving in this direction, swings almost immediately in the opposite direction, or what we call a false breakout. So we discussed this on Tuesday, and we talked about not entering before we see this kind of manipulation, a sharp drop, and then the market moves in the opposite direction. So it played out as we had expected, a sharp drop, and then a continuation to another high. And now we have yet another pattern, which is likely to play out the same. So you just have to be observant and find the absolute best entry point. So this is for the NASDAQ 100 index, but it's also happening in the Dow Jones index. So you see some sideways momentum for a while, and then the market makes that sharp Judas candlestick before moving. So it's not an uncommon thing. Notice how we had a sharp drop and then a continuation. It kind of happens more frequently than not. And you look at the NASDAQ is the same. You look at the SP 500, this is sideways momentum. So wait for that potential opportunity. Don't trade in a sideways market. So Bitcoin has had 5 straight sessions of bullish momentum with the exemption of one day. So if you look at these are 5 candlesticks. Only one is red, and the others are green. So after hitting a rock bottom of $80,575, it bounced pretty well. And from what we are seeing here, it seems like a very strong recovery. So good chance that we see a continuation of the same. So it's up over falling for 4 consecutive months. In 1 month, in 2 months, it had recovered and went to a new high and kept going even higher. So now we saw 2 consecutive months of a sharp fall. And now as we enter December, we are seeing a pretty good recovery. So on the dollar index side, you'll notice that for the week, the dollar index has been on a fall. So we had identified these 4 straight days where the dollar index was moving sideways, but eventually we had a break towards the lower side. Of course, this can be seen from the CME Fed Funds futures, where the market is pricing in a much higher probability of a rate cut in December. So with the dollar weakening, we've seen some of these currencies strengthen and bounce pretty strongly. So for the New Zealand USD on the 4-hour chart, we broke a major trend line here. And now I'm trying to construct a new trend line here, where the New Zealand USD is expected to bounce from based on these 2 prior highs. And now looking at a smaller time frame, we know that this doesn't happen in a straight line. So we could be seeing some form of pullback playing out here before some form of continuation plays out. So markets don't move in a straight line. Even after the rate decision announcement, there was a pullback before a continuation. So we expect some form of pullback to play out before we see a continuation. So now looking at other currencies, you look at AUD USD, we had a major trend line here. So we discussed the market going for this area here before breaking. That was on Tuesday. On Wednesday, we saw an acceleration of price. And today, we are seeing yet the same, a very strong push higher. And right now, what we are seeing during the current session is pretty similar to what we saw yesterday. Market pulling back down before bouncing and moving higher. So this could be the same play today. We get yet another pullback and then potentially an extension of the rally as these currencies continue recovering against the USD. Kindly give me a sec. There's someone on my door. All right, let's continue. So, good question here. With the development of NVIDIA, how do you expect the SP 500 NASDAQ to respond, rally, or crash? So NVIDIA reported better than expected earnings in the most recent report, and that is expected to boost the markets. So NVIDIA is not the only thing that is boosting the markets. There's also the performance of the other Magnificent Seven companies, which form about 30% of the SP 500 gains. So those companies have taken so much weight, and they are still doing well in terms of earnings and revenue. But also, monetary policy is a key determiner in the direction of the stock market index. And from what we are seeing is that the Fed is cutting interest rates. We already expect another rate cut in December. At the same time, we know that Trump is about to appoint his own Fed chair next year, who would likely go along with his policies of cutting rates. And at the same time, the end of the shutdown meant that the US has agreed on a budget. So we expect the US Treasury to inject more liquidity in the markets through the fiscal budget, which would likely pump the markets higher. So policy uncertainty and tariff uncertainty is no longer a big concern in the market. And the premium on geopolitical news, especially the Russia-Ukraine war, is about to come to an end. So everything is shaping up for an extension of the bull market. So yes, there are concerns about the market crashing because of the overvaluation of AI stocks. But now they are too big for the market to be ignored. And most likely, Trump will backstop the AI industry, which he has been talking about almost every day. In every one of his travels, he tries to secure deals for other countries and companies to invest in AI in the US. So good chance that we see an extension of the bull market. So possible scandal might take time. In the end, if it becomes a scandal for NVIDIA, then that would mean some form of class action suit, and it takes time, takes investigation, some form of congressional hearing. So not something that might apply to our trading as per this year, and we still have 30 more days to continue. So as I had mentioned earlier, I would like to get some feedback if you've benefited from these sessions since we started or since you started listening. If you have improved your trading analysis and results in your trading, kindly share feedback in the comment section. And if there's something you would like us to improve next year, kindly drop that in the comment section and we'll be more than happy to consider the feedback. We always appreciate feedback from our clients. So if you're new here, you should know that these sessions happen every day from Monday through to Friday at 11 a.m. And you can register for a trading account using the links in the description below. It's free of charge. You'll get a demo or a practice account where you can trade for a while as you learn how to trade a live account, and this will help you get to the next level. So we have a free course available on YouTube. It's called the Novice to Pro series. So make sure to check it out on FXPesa's YouTube. So we also have a podcast called the Bullish Banter Podcast. Make sure to check out the most recent episodes. You just go to FXPesa page, click home, and you'll see the most recent episodes we've done, interviewing different traders, learning their strategies, their risk management, their journeys, and many other aspects of trading, as well as their analysis of the markets. So all live streams are recorded. So if you missed something, you can always go back and check out the video, including this one. And the Novice to Pro course is found here. Just click on playlists on the FXPesa channel. Scroll until you find the Novice to Pro series here. And so far, I believe it has been pretty helpful, with only the first episode having over 46,000 views within a period of 3 years. I believe that's a lot of traders with a lot of interest, and people pushing through all the way to the last episode, with the last 10th episode having 26,000 views. So I believe it's a valuable course for you if you're just a beginner. And once you go through this, then join us daily on the market snapshots, where we get to analyze what is trending, what is influencing the markets today, what is tradable. And once you identify those opportunities, then you make the best out of the markets. So that is it. That is all for today. Thank you very much, everyone, and enjoy the rest of your trading day. Happy Thanksgiving.